Hi, this is Kribakaran Rajendra and welcome to another video series with Groww. So in this video, we are going to talk about every trader's dream, which is to become a full-time trader. So if you're a person who's trying to quit your job and trying to become a full-time trader, then definitely this video is going to be helpful for you. So in this video, we'll address how should one plan about becoming a full-time trader. What is the ideal capital that is required? What is the methodology that one need to adapt to? And what are the important factors that no one talks about it, and what are the disadvantage that is there. I'm being a full-time trader, I know what are the hardships that I've gone through, so I'll explain all my experiences in this video. So if you're a person who's trying to get into this zone of quitting the job and becoming a full-time trader, definitely whatever the things that I'm going to share in this video will be really helpful for you. The most important question that you need to ask yourself before becoming a full-time trader is, why do you want to become a full-time trader? So this answer that now you are answering yourself, why, if this answer is very strong enough, then you have a high chance of becoming a successful full-time trader. Because many people wanted to quit the job and become a full-time trader not because they love trading, but because they hate their current job or they hate their current boss. So you need to ask yourself, because if you hate your job and trying to be focus on trading because you think your current job is more stressful and trading is much easier to make money, then you are totally wrong. Trading is much more stressful than your current job. So trust me, since I'm in this industry for quite a long period of time, I know exactly how you would feel when you're totally dependent on your trading income. So if you just think that your job is more stressful and you wanted to get into trading because of your job is stressful, then don't come into full-time trading at all. You really need to have that patience. You really need to have the patience and patience, because with respect to trading, you need to put in a lot of efforts. You need to watch the markets, you need to observe the markets, you need to create your trading strategies, you need to test it out, and then you need to deploy it. So there are a lot of iterations that is involved. There could be multiple periods where you will not be able to make any money at all. So if money is the ultimate motive for you to get into full-time trading, then the motivation factor will soon burn out. So there should be a long perseverance that is involved with respect to becoming a successful full-time trader. So ask yourself why you wanted to become a full-time trader. So as long as you are able to get this conviction answer for this why, then start focusing on what are the next steps that is involved with respect to becoming a full-time trader. And the second thing is, set your expectations correctly before you getting into full-time trading. Because let me tell you a story. Say everybody knows Warren Buffett, right? And some of you know Charlie Munger also. But there is this third person called Rick, who is also part of Berkshire Hathaway, and nobody is aware about this person called Rick. So if people talk about Berkshire Hathaway, or people talk about the successful long-term investor in the entire world, they mainly name Warren Buffett or Charlie Munger. People forgot about Rick, but he is also partner of Berkshire Hathaway. So what happened to Rick? So when the same question was asked to Warren Buffett answered that during 1970s or 75s, what happened was there was a huge a crash that happened in the market, and Rick, who is also a partner of Berkshire Hathaway, he had huge leveraged positions. So he used to pledge his holdings of Berkshire Hathaway and try to take over leveraged positions, and when market tanked, he got a margin call and he had to eventually sell all his holdings. So because of that, Warren Buffett purchased all the holdings from Rick, and he has to give back the money. And the overall problem occurred is mainly because Rick took over leveraged positions by pledging his holdings, and since the market totally went against him, he was not able to come out of it at the right time. So he has to he lost a lot of money during that transaction when the market went almost 75 or 85% of down during the 1970s period. So because of which Rick lost all his holdings of Berkshire Hathaway, and eventually Warren Buffett has bought back the holdings. So what Warren Buffett saying was, we always know, in the sense Charlie Munger and Warren Buffett, we always know that we will be rich at one point of time, but we were not in a hurry. But Rick was also in the same boat, but he was in a hurry to become rich. So this is the exact thought process that you need to keep in your mind if you are focusing on becoming a full-time trader. So becoming a full-time trader and this making profits is a long journey. So if you wanted to make profits overnight, and if you wanted to make huge money within a short span of time, then you tend to risk more. So the moment you risk more, there is a high probability that you lose all your capital. So all the successful traders that I know personally, so during the initial years, what they did is, they are not dependent on their trading income for their day-to-day living. So what it means is, if you are now putting all your capital and end of the month, if you think, okay, I need to make X amount from this overall trading capital because I need to pay my EMI, I need to pay the rent, and I need to pay the EB bill, and I need to pay the gas bill. So if you have so much of list of activities as a target, then what happens is you will not at all follow your trading process correctly. There will be immense pressure for you to make money at the end of the month, because if you don't make that money, your family is going to suffer. So this pressure will be very, very immense for any kind of full-time trader. So they tend to take all irrational decisions. So that is why many people who get started with full-time trading eventually go back to job. So always have a clear-cut, reliable source of secondary income. Whether it can be your spouse who is going to work, who is taking care of the family, so that you will have initial 1 or 3 years of time period to prove yourself. Or else you have some other business which can take care of your monthly expenses, or have some passive income like FDs or some other collateral which you have, using which you take care of your monthly expenses. Because during the initial years, if you are completely dependent on your trading income for your day-to-day expenses, then that is going to put you a lot of pressure. So let's consider your job versus your trading income. See, consider you are making a 1 lakh salary every single month. So I have just added from January to December, I am making 1 lakh every single month, like your take home salary. And here, this is a trading income, which is my actual income, which I have made, which you mentioned in terms of percentage. So for an example, 4.2, which is nothing but I made 4.2% of my trading capital in the month of January. So in February, I made 4%. March, I made minus 0.3%. So likewise, it goes on from January to December. So as you could see, every single month the returns varies. So there are months I make 4%, there are months I make flat returns, there are months I make only 1%. So there are days and months which I don't make returns also. So consider my trading capital is 25 lakhs. So with 25 lakhs, if I make 4%, then I am making almost equal to my salary, which is 1 lakh. So next month also I made 4 lakhs, so 4%, which is 1 lakh. Next month I made 0.3%, minus 0.3%, which means I made loss of minus 7,500. If you were in job, you would have made 1 lakh of overall salary by end of the month. But that month, as a full-time trader, my income is negative. So that is why I said you shouldn't rely on your trading income. So what will you do on that month? So if that month the overall returns is negative, then there is no way that you could take care of your monthly expenses. So with respect to trading income, these returns are always non-linear. So there are months where you make higher returns, there are months you make lower returns. But if you try to focus on increasing these overall returns, instead of 4%, I should focus on making 10%. I should make overall income as 20%, so that I can take care of my trading income, or overall my expenses can be taken care if I focus on increasing my overall returns. Don't do that. When you try to increase your overall returns, you tend to risk more. Instead, start with a higher capital. So instead of 25 lakhs, say suppose if I have started with 75 lakhs, then consider what would be my overall income is. So the same 30%, but overall I am making 23 lakhs by the end of the year. If I am a salaried person, I would have made only 12 lakhs. But by having the same trading strategies, same returns, I just increased my overall trading capital, which helped me to take care of my monthly expenses. Say suppose these 2 months I make 6 lakhs. Next month I did not make any returns. Still I will be fine with it, because I have additional income to support those loss making months. So with respect to trading, the first and foremost important point is focus on building your trading capital. So what should be the ideal capital that I should consider to get into full-time trading? So what I would say is, find out what is your annual income, and if your annual income is 10 lakhs, then multiply that by 4, which is 40 lakhs. So 40 lakhs should be your ideal trading capital to get started with a full-time trader if you wanted to replicate almost equal to your overall monthly income. So only then start focusing on full-time trading career. As long as you don't have this trading capital, don't try to get into it. Start working on building that capital first. Don't try to build your overall returns. Focus on building your capital first, which is going to be at least 4 times of your annual income. Only then try considering quitting your job and becoming a full-time trader. You should know how much is the ideal returns expectation with respect to a full-time trader. I would say 30% is decent enough. Actually 30% is more than enough, because when your capital is large enough, people who have a lower capital, they expect a higher returns. People who have a higher capital, they expect a lower drawdown or lower risk. They are happy with the decent returns. So with 30% returns, I would say why less is more. See, there is a term called rule of 72. 72 divided by your rate of returns expectation. Say suppose my returns for the last 12 months, if it is 30%, then 72 divided by 30, which means that it is 2.3. So 72, rule of 72 is nothing but 72 divided by the rate of returns gives you the number of years it is going to take to double up your capital. So in my case, with 30% returns, then I can easily double my capital every 2.3 years. See, if the same money, if you put in FD, it is going to take 12 years to double your capital. So that is the effect that the trading can give you. So you don't need to make huge returns. Even with minimal returns, if you are able to make that consistently over a longer enough period of time, then you will be easily able to double your capital every 2 years or 3 years. So don't focus on trying to come up with trading systems which can give you high returns. Instead, focusing on controlling the risk and make sure that say suppose if your trading strategy is giving you 100% returns, but it is giving you 50% drawdown, don't go for that. But if your trading strategy is giving you 30% returns, but the overall drawdown is only 3%, then go for that, because your risk is very, very minimal. As long as your risk is very minimal, you will have this discipline to stick to the system. And the moment you have the discipline to stick to the system, eventually you will become a successful trader. And if you are working in full-time job and you are having a commitment like car loans, personal loans or housing loans, and then if you are trying to becoming a full-time trader, don't do that. As long as you close all this debt, don't get into trading, because that is going to put you in immense pressure, and that will not help you to be at the optimal level when you're trying to perform with your own trading. So make sure you clear off all your EMIs, all your debts, and then start focusing on trading. And most people don't give this importance, because many working professionals, they get their insurance from their employer. So the employer provides the health insurance, term insurance, everything to the person who's working there, so that their family is protected and everything is there. The moment you quit your job and become a full-time trader, you don't have any insurance at all. So make sure that you have adequate insurance, both term insurance as well as these medical insurance, health insurance, so that your family is not at risk because you quit your job and becoming a full-time trader. Even a lot of my own friends, they who are working professional, they don't have a separate insurance. They are largely dependent on their employer for all these insurance purposes. So when you're trying to become a full-time trader, keep this also in mind, because many people totally miss this part. And if you have any specific medical emergency, and if you do not have these kind of insurance, then you will end up taking out your trading capital and taking care of all these medical expenses. Again, once your trading capital is gone, you are gone, you have to again go back to your full-time job. So make sure that these things are taken care when you're trying to get into full-time trading. Let me tell you an interesting story which you can very much relate to trading. See, this is a real-time incident which happened very long back. So this is a story of a person called Milo. So Milo is actually a Greek Olympic athlete who used to win multiple championships back to back with respect to wrestling. So what happened was, everybody know that okay, this guy Milo is actually a very successful wrestler who won multiple championships, but they wanted to know the secret behind it. So one time there was a championship match that was announced between this Milo and a competitor. They said that within the next few months of down the line, the competition is going to held. And now people are very curious to know how these two fellows, Milo and the competitor, is going to train for this wrestling match. So they wanted to know the secret behind that. So what happened was, after this announcement was made, the competitor of Milo, he directly went to a market. He bought a very big bull, so that he could lift that and train hard for this wrestling match. And people were like, wow, yeah, this is very good, because you have to train hard to beat a person like Milo. Only then you would be able to win the match. So by lifting this a big bull, is training really hard, so it makes a lot of sense. So now people are more curious to learn what this Milo will do, because the competitor is directly going and buying a bull and trying to lift that every single day to train. So now what this Milo will do so that he could outrun his competitor. So what Milo did was, he went to a nearby market. Instead of buying a big bull, he bought a very small calf. And everybody is very curious to know, why should he buy a small calf? Because being one of the championship, like won multiple champions, one of the very strongest guy, why should he buy a small calf instead of an ox? Because anybody could lift that calf, right? But what happened was, this Milo, after buying a calf, he carried that on his shoulder every single day wherever he went. Like if he goes to a training, if he goes to a marketplace, wherever he goes, he keeps carrying this specific calf on his shoulder every single day. So what happened was, over the period, he is getting used to this calf weight, and the calf eventually grown into a big bull at one point of time, right? So that is what happened. So this competitor who bought a big bull on a day one is trying to lift it, he couldn't lift it because that bull is outwise his own weight. So he's trying hard to lift it, but he couldn't lift it. Whereas the Milo who bought a small calf, he eventually grown into a big bull. Since he is carrying that on his shoulder every single day, he is getting used to that weight, so he did not even feel like the calf is growing, and eventually when it grown into a big bull, he was able to lift it effortlessly. That is the story that we need to relate it to trading, because with respect to trading, as long as you are trading with a capital of no few lakhs, like 1 lot or 2 lots, then from 1 lot to 2 lot, if you increase to 3 to 5 lots, then 5 to 6 lots, then slowly when you gradually increase it, the day-to-day MTM fluctuations, you will get used to it. So when you are trading with 1 lot, you will know the maximum loss is going to be minus 5,000 to plus 5,000. So you will have this trading psychology to handle all these fluctuations. Then suddenly when you move from 1 lot to 100 lots, then your MTM fluctuations will be minus 5 lakhs to plus 5 lakhs, and you will not be able to handle it. But when you slowly gradually move from 1 lot, 3 lots, 5 lots, 10 lots, then you would be able to handle this MTM fluctuations. So when you are becoming a full-time trader and start deploying with a higher capital, these kind of fluctuations you have to get used to it. So that is why I said it is going to take some time, at least for 2 years or 3 years of period, to get used to all these MTM fluctuations. So even though you have enough capital to trade with higher capital, the moment you start with full-time trading, don't go with it. Start slowly and gradually scale up your capital so that you will get used to it. The moment you get used to it, then you will stick to it, and it's all about being disciplined with your own trading system. So the moment you get this point, then no, there is nothing that's going to stop you to become a full-time successful trader. So this is what I wanted to convey in this video. So I hope you would find this video really helpful. So if you guys have any specific questions, please post it in the comment section. I'll address it. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.